Okay, folks, so let's get into it. So we're here looking at the July numbers, comparing it to the last couple of years and looking at the trends and see if we can work out kind of what's going on behind the data. This is, of course, the facts, and then trying to look at the story. I suppose I can bring my own colour from our experience on the ground at Low & Co. But in summary, look, as you all know, it's been a pretty tough time. Excuse me, just got someone else coming in. It's been a pretty tough time over the last few months. There are some mixed signs that the market might be stabilizing. So this is kind of the first possible signs of some better news for sellers. I wouldn't call it amazing. It's not a great market for sellers, but at least the cessation of more bad news for sellers, things getting less bad or stabilizing at least, not necessarily getting better. Although what we often see at this time of the year as we come into winter is people generally tend to believe that winter is a bad time to sell. And so therefore the amount of supply coming to the market slows right down. And by virtue of the fact that there is then less new supply for buyers to choose from, it can become a better time to sell, ironically. So as is often the case, you should duck when other people are diving, and do the opposite of what the crowd are doing. And that's the case in winter. And in fact, data from TradeMe shows that each TradeMe ad on average gets more attention in the depths of winter when the listing volumes are at their lowest point, typically at their lowest point seasonally, which again goes to support what my argument. And the other hard data that we have is our own open home statistics. And what that shows is that essentially, it doesn't matter what time of the year it is, there's a direct correlation between the number of open homes we are running and the average attendance at each open home. So in February, March, April, the number of open homes is large. There's a lot of open homes, and the number per open home falls away. It spikes as we come into the new year in January, because there are very few new listings on the market yet, and the ones that are coming to the market are sort of coming in stages. But there's a lot of new buyers in the market, so we get a large amount of attention per listing in January at the open homes, and then it drops away February, March, April, and then as the supply stops flowing to the market in such high numbers, often it's after daylight saving comes off. We see the number of open homes reducing, and then the number of viewings per open home increasing, and then it might reach a peak somewhere around September-ish, before the spring flood of new listings comes back on the market, at which point the number per open home drops down again. So again, I often say to people, if you're looking to sell and you're wondering what time of year, don't be put off by winter. And if your property gets good sun, then winter is a really advantageous time to sell, because it demonstrates it gets good sun compared to others that might not. And there are fewer listings on the market, so it's easier to compete for the buyer's attention. Anyway, that was a bit of a long sort of blurb as we introduced this, but as is typically the case in winter, new listing volumes are falling, but they have been falling the last couple of months. They are falling more than they typically do. So this winter compared to last winter, we're seeing the supply of new listings reduced compared to 12 months prior. That being said, there is still, relative to sort of longer term 10-year trends, there is still more supply on the market now than we have typically seen in a wintertime in Wellington over the last 10 years. So for buyers, there is still plenty of good choice out there. So, don't hesitate, just carry on, get amongst it. So let's look at the detail. Median sale price, $755 in July versus $765 a year ago, down 1%. From month to month, it bounces around a bit, of course, but the overall trend is quite clear to see. You can see that red line there, which is the 6-month moving average. That is basically going sideways for 3 years now. since July 2022, broadly, so up a bit, down a bit. We strengthened as we came in towards the election, and then after the election it weakened, and then over the last couple of months things, it deteriorated again, and then over the last couple of months perhaps some stabilizing, which we'll get into in a bit. If you follow these meetings, or indeed you look at my videos, you'll know that I don't pay too much attention to the median sale price because it's influenced a lot by the mix of properties that are sold, bounces around a bit, as any data series does. But what we, of course, as investors, assuming that's who I've got on the call here, what we're interested in is underlying values, not sale prices, but what's the movement, and are values improving, going sideways, or deteriorating? And the best guide of that is the Real Estate Institute House Price Index, and so that's what we're looking at here. So this is the league tables. That column on the right-hand side there shows us how much have the different regions fallen in value since the peak in late 2021. The peak in 2021 for the nation overall was November 2021. Wellington actually peaked slightly early in October. So we've still fallen further than any other region. Just let someone else in. At almost 26%. Last month it was, gosh, I thought last month it was actually worse than that, but it can't have been because we've deteriorated in the month. But anyway, 26%. It's about as bad as it's gotten. If I recall correctly, we fell sharply till, as I said, about July 2022. It was not long after that it reached its absolute bottom, which was about 26% down, about the same level as we are now. Then we recovered, then we've gone down again. So we're about at the same level as the previous low point, which was 2 years ago, maybe slightly more than 2 years ago. I think it was early-ish 2022. So pretty much, folks, this is as bad as the values have gotten in Wellington since the peak, since we dropped from the peak. You can see there that Auckland is not far behind us at nearly 24%. And interestingly, look, you got Auckland has had a really bad few months, down 3.3% and down 1.8% for the month. So Auckland's had a pretty bad time lately. It's been worse up there than it has been here, at least according to this data. Country overall, not quite 17% down. So certainly Auckland City and Wellington City are the markets that have fared the worst since we came off the post-COVID peaks. What about over the last 12 months? Wellington has also been the worst performing region over the last 12 months. Now, down 1.2%, it's not a big drop. Very, very small drop compared to a year ago. But nonetheless, most regions around the country have improved slightly. Southland 2.8, Taranaki 5%. Most improved, not by very much, but nonetheless, Wellington at a small drop of 1.2%. Worst performing region over the last 12 months. Over the last 3 months, bit of a different story. So you can see there, we're down just over 1% over the last 3 months. Plenty of other regions around the country have also had a rough 3 months, and in fact, considerably rougher than Wellington. So it's nice to know that we're not the worst performer across the board, like a clean sweep. So as I sort of indicated earlier on, Auckland down 3.3%. That's pretty rough. Northland 2.3, Waikato, Bay of Plenty, 1 and a bit, and so on. Anyway, point is, even Southland down 2.2%. That's unusual because they've been performing pretty well way down there. But anyway, point being, over the last 3 months, yes, we've gone backwards only by a little bit, and there have been plenty of other regions around the country that have suffered more than us. So the last 3 months haven't been great around the country in general. Let's look closer in the Wellington region. So there you can see, look, the shape of the graph. If you look at the orange line, because that has less variability, because it's a 3-month cumulative result, not a 3-month average, a 3-month cumulative. So you'll see the peaks are higher because it's adding 3 months together, not averaging the 3 months, and the troughs are deeper. And over the last 3 months, you can see there we did have a bit of a trough, not a deep trough compared to the previous ones we've seen. And in the last couple of months, we have broadly recovered from that trough. So as I sort of indicated at the top, we have seen signs over the last couple of months of stability, some stability returning to values. The blue chart there, you can see that's the monthly result. So it's been negative over the last 3 months, but barely. So it's only just below zero. You could be forgiven for saying that is going sideways. That is broadly neutral. It's not, of course. It's ever so slightly negative, but emphasize the ever so slightly. Over the last year, look, there are the different regions or the different territorial authorities that make up the region, all negative in terms of Porirua, Upper and Lower Huts, and Wellington City. By this data, at least over the last year, Wellington City hasn't fared as bad as Lower Hutt, but still going backwards. Over the last 3 months, it's a bit more mixed. So some positive territory there in Porirua and so on. Obviously, the smaller the data set, the smaller the period of time, the more variability there is there, of course. But anyway, the point being that it's whereas the 1 year results are unanimously negative and overall not tiny negative numbers, 1.5, 1.3, 3.2, the 0.3 at Porirua, bit of an exception there. They're all definitely negative, whereas 3 months they are smaller and negative and with some positive. So perhaps again some signs that there might be some stability returning. And if we went to the 1 month again, you can see it's 2 negatives and 2 positives. So again, some signs that perhaps we might be seeing some stability. Wellington City itself. So as I sort of indicated, Auckland and Wellington, the two really poor performing areas in the country. And this is a bit of a theme since COVID, really, the cities versus the regions, or the suburbs versus the CBD. The CBD and the cities have become kind of out of fashion since COVID, and people are chasing more lifestyle. They're wanting to work from home more. And so their proximity to work is not as important as the nice, comfortable home and the outdoor living and the garden and all the rest of it. But nonetheless, Wellington City actually in the last, recently hasn't been doing too badly compared to the region overall. So it's nice to see a little bit of stability perhaps returning to the city. Just jump in anytime if you've got any questions or want to talk about stuff, but otherwise we'll push on. New listings. This obviously looks at the supply side, but it's not the gross amount of supply. It's the amount of new supply coming to the market in a month. Now, I think new listings volumes are for a buyer who's in the market, the new listing volumes is of more interest than the total volume. If you think about it, once a buyer has been in the market for a few weeks, they've basically looked at what's already on the market and they've made a decision already about it. I'm not interested, or I am interested, or whatever. And if they're not interested and they're still looking, then what they are really giving their attention to is the new supply coming on every week. So when the supply increases, and we're seeing maybe 20 listings coming on a week that might be of interest to them, that's a very different feeling than if there's only 8 new listings coming on every week that might be of interest to them. So if they're used to, for example, 20 a week, they get into this mindset which says something like, if I don't get the perfect property at an absolute bargain price and the vendor is not absolutely on their knees and willing to take anything I offer them, then I'm just going to move on because there's 20 coming next week. When that dries up and it goes to 8 or 6 or 10 or 7, the feeling is much more, crikey, I don't have quite the same bargaining power. Maybe if I see something that is good, I shouldn't be so demanding. I should perhaps be more reasonable in my negotiations. They don't feel like they've got quite as much leverage because they just don't see the flow of new supply. They can't rest assured that there's another ocean of supply coming on in the next week, 2, 3, 4 weeks, and so on. So it's that flow of new listings, which I think is at least as important as the gross level of supply on the market. And so when things tighten up in winter, what we often see is the buyers become a little agitated and they think, oh, crikey, maybe I better look at those other properties that I had previously discounted again and reconsider them. And so That's why I particularly like, even if we have a large amount of supply on the market, if we see the number of new listings coming to market falling, then that's very good news for sellers for those reasons. So anyway, look, there we go. 507 new listings in July versus 575 a year ago in July. So 12% down on a year ago. So that's positive news for sellers. Fewer new listings that are competing for the attention of the buyers in the marketplace. Still a lot more, 37% more than 2 years ago, July 2023, 371 at that time. Now, as we were in July 2023, we were heading towards the election. For some reason, people tend to sit on their hands as we're coming to the election. They decide it's not a good time to sell, which therefore, again, ironically, makes it a great time to sell because everyone is holding their property back from the market. Then when the election comes, everyone goes, righto, let's get on with it. And they dump their properties on the market because it's better to sell after the election. And that makes it a bad time to sell because there's so much supply on the market. And that is indeed what we saw. The market deteriorated significantly after the election, whereas it was quite good before the election. So yep, fewer new listings coming to the market, so that's good. And you can see the trend here. As I said, look, after the election, you can see what happened to the amount of new supply coming on the market. It absolutely skyrocketed, and then it fell away again late 2024. This year, as we headed into the summertime and so on, we on average increased, and now we've been plateauing and coming back down again. That's the 6 monthly result. The blue chart shows the monthly results, which is where you can really see the seasonality coming in. There's December last year, and then we skyrocket into January, February, March, and then in April we start seeing the drop off again. So new listings down on last year, still lots more than 2 years ago. And there is the normal number of new listings for June over the last 10 years. So that's very encouraging. 507 listings in June versus a long-term average of 539. So not only are we down on last year, we are slightly below what we would typically see. And for a lot of this slow period, of course, since we've been after the peak, we've tended to have seen more listings, not fewer, coming to market. So the fact that we are now slightly below long-term averages for the month, that is definitely a positive sign for sellers or those of you thinking of selling. And there it is, the change compared to 12 months ago. So again, you can see that red line, the trend. For many months, we've been, on average, significantly more listings coming to the market than 12 months prior, and that has been dropping away over the last 12 months. And in the last 4 months there, you can see we have been below the same month 12 months prior. So again, good news for sellers. On the other side of things, we've got the number of sales. Now, this can be some proxy for demand. It isn't always, because the number of sales contracting doesn't necessarily mean buyers don't want to buy. It can mean that supply is so tight there is nothing for them to buy. That is not the case at the moment. There's no constraint on volume of sales taking place imposed by the amount of supply on the market, because we have had relatively abundant supply. The thing that I'm taking from here that is positive is that red line. You can see the overall trend is gradually increasing. Now, I have to emphasize gradually. It's been increasing for about 3 years, and it's like glacial pace. You can see there, on average, we tend to sell between about 600 and 800 properties a month in the Wellington region. Since late 2022, late 2021, we saw that number starting to come down. And as we came into 2022, after the peak, that number of sales was really low, and on average going around the 500 sales per month. So that's extremely low levels indeed. And so whilst we have been increasing quite consistently, but reasonably slowly, it has been coming off a very low base. And only in the last sort of 6 months or so have we been averaging over 600 a month there. And so it's still relatively subdued sales volume levels, but at least it's at the low end of what we would typically consider to be normal, as opposed to totally anemic where we were in 2022 and a lot of 2023. So 581 versus 590 a year ago, broadly the same as a year ago, and a third more than what we saw 2 years ago. So overall, again, encouraging news for sellers. We are still, even though things have been increasing, we are still slightly short of what we would typically see in your average July, though. Not by very much, but still, this is, as I sort of indicated, we're still lower than normal. We're at the low end of the normal range, so still below average sort of numbers. So that just means there's still plenty of headroom to go, plenty of room for improvement there. But generally, so far, we have seen increasing levels of sale volumes. Again, there it is represented in another way. So, yeah, more sales taking place in the last 12 months or so. Prior to that, we were the red line below the x-axis. And as you can see there, the degree to which we are exceeding 12 months prior has on average been reducing, but still we're above the x-axis there, not below it. How long is it taking to sell? Look, it is quite a long time still. We were 54 days in June. We're 53 days in July. So unlike those other two measures where we've seen contracting amount of new supply coming to market, that's positive for sellers. Increasing number of sales taking place, albeit gradual, that's positive for sellers. Taking longer to sell on average, that's kind of counter to those other two measures. And that's obviously negative for sellers. So 53 days, what's that, 7.5 weeks, that's best part of 2 months, and that's on average. So if half of properties are taking longer than that, then that's quite a long time to wait for your property to sell. So yeah, it's certainly a long time for sellers. Versus 46 days a year ago and 52 2 years ago. So about the same as it was 2 years ago. Definitely longer than it was 1 year ago, and certainly longer than your average for July, which is 40 days. So a third longer than average over the last 10 years or so is what we saw in terms of duration to sell. So that's not great news for sellers. Inventory, 15 weeks worth of inventory versus 17 a year ago. So we're tightened up a bit versus a year ago, but we're significantly more inventory compared to 2 years ago. So again, that's consistent with my story before. As we were coming to the election, the market was quite strong. Vendors were holding their properties back from the market. There was less inventory on the market. Then after the election, it flooded on and the market got significantly weaker. And so the amount of inventory sort of ballooned out. And we've been bouncing around, as you can see by that red bar, by the red chart there. We have been bouncing around 14, 15 weeks typically over the last 6 or 8 months or so. Interestingly, 15 weeks is exactly the long-term average. I think that's over about 15 years or so. Now that's pretty strange because on that basis, that metric would indicate that we're in a perfectly averagely balanced market. Well, it sure doesn't feel like an averagely balanced market. It feels like a buyer's market. And one reason for that will be that whilst 15 weeks is the very long-term average, the average over the last 10 years is 10 weeks, 10.4. So compared to what we can kind of remember in recent living memory, 15 weeks compared to 10 and a bit weeks, 15 weeks is definitely a lot more inventory than what we're used to seeing. And so that is consistent with it feeling like a buyer's market compared to what we're used to over the last 10 years. This is gross supply volumes on TradeMe. Again, look at the trend there. You've seen over the last 8 months or so, number of listings coming down significantly. That being said, coming down from the high point that we've seen in 10 years. We've been at these kind of levels where we are now or higher 3 times since the peak of the market. But the direction of travel in the last 6 months has been downwards. So again, that's the positive news story for sellers. Obviously for buyers, there's still a lot of choice out there compared to if you look at anything between sort of early 2016 and 2021. And the amount we've got on the market now is not atypical for the last 4 years or so. So there's still plenty of choice for buyers. But again, the positive news for sellers is that the direction of travel has been down significantly over the last 6 months or so. As you can see there from the table, number of listings on TradeMe about the same as what we saw a year ago, significantly more than 2 years ago. Again, consistent with what I'm saying about the way the market was as we headed into the election, significantly stronger, much less supply on the market. And so that's why we're seeing a 44% increase compared to 2 years ago. And there is in another story again. So broadly the same as you can see there, right at the end of the chart there on the right-hand side, tiny little blue bar charts there, meaning we're broadly the same, only slightly ahead of where we were a year ago. And compared to the last 12 months where we've been, that red line is over the x-axis, we are back down to about parity, having been significantly over parity when you make that comparison. So in summary, folks, Wellington values are down slightly, very slightly since 12 months ago. New listing volumes are down versus a year ago, back to about average for July. Again, this is positive news, relatively positive news for sellers. Sales volumes are about the same as they were a year ago and trending up gradually over the last few years. So again, positive for sellers, although as I've discussed, the number of sales taking place is still at the low end of normal. Duration to sell is up. It's quite long again, 53 days and 54 days last month. So that's definitely a long time compared to what's normal for July at 40 days. Inventory is exactly normal for long-term averages, but significantly longer than what we're used to seeing over the last 10 years. TradeMe listings about the same as last August, barely up, and down seasonally over the last 6 months, and down quite steeply compared to what we typically see. So again, that's good for sellers. So the message to sellers is that the fewer new listings that we've been seeing over the last couple of months will help. We are seeing, as is typically the case, we're seeing at Low & Co, we're seeing, myself and my colleagues, we're starting to list property again for spring. So it'll be interesting to see how big a jump we get. Is that jump going to be typical, bigger than typical, or is it going to be slightly less than typical again? Obviously for sellers, we're hoping for slightly less than typical increase in supply. The buyers will be waiting with anticipation and hoping there'll be a flood of new listings, so time will tell. Buyers, although there have been fewer new listings coming to the market, the gross amount of supply out there is still abundant. There's still plenty to choose from, so get amongst it. Thanks, of course, as usual, to my data suppliers, Real Estate Institute and realestate.co.nz.